Good morning, everybody. Kirk Spano, Investing 2020s. It is November 18th, just a couple days until Turkey Day, and I am making a chumpkin cake. What is a chumpkin cake? Well, a chumpkin cake is one layer of graham cracker pecan crust, followed by, and I'm trying to find a picture of it for you on the internet. One moment, please. Should have had this for you. There you go. There you go. So I am making this for Thanksgiving, except we're going to use a cake form, one of those pop-off cake forms. I don't know what they're really called. Had tried it last year and did the water bath and got the crust wet. This year I have a modified version of a water bath. I'm just going to put a tray beneath the tray in the oven, and that's as good as it gets. But this is going to be graham cracker and pecan on the bottom crust, cheesecake, pumpkin, and then pecan on top. So hopefully I don't screw it up this year. Last year, because the crust got wet, I flipped the cake upside down and I called it a deconstructed cake. So it still tasted pretty good, but it's kind of like, you scooping it out and, and look kind of funny. So I'm going to try to go for form and function this year. So that is the lead up to Turkey Day, to Thanksgiving. I have a lot to be thankful for this year. A little bit of high blood pressure in July. I got that under control, losing weight. Got engaged at the Grand Canyon. The kids are doing well. The grandkids are doing well. Some of my investments are doing well. So with the exception of the Brewers being crummy in the playoffs again, been a pretty good year. I don't know. The world just seems to keep getting better to me, but I think in general, the world gets better. I had a discussion with a client this week, and I thought there was some cognitive dissonance going on. There's a lot of negativity, and we talk about that all the time. But I point out that since the Dark Ages, generation over generation, life on the planet has gotten better and easier every single generation. Now, that doesn't mean that every single year gets better. It doesn't mean that there's not bad 5 and 10 year periods. There are. We're seeing a couple of wars right now, but that's in the context of the fewest amount of people in the world fighting in wars in history. So it's a small uptick from 2019 when we set a record for fewest boots on the ground. And boots on the ground, soldiers actively engaged in war, has been going down for decades, and it looks like will continue to go down, in my estimation, because the formula has always been, if you have a pie, actually it's chicken in a pot, but if you have something to eat and something to protect, somewhere to live, and life is generally getting better, it's harder for demagogues and dictators and everybody else who wants to try to control us, insert your favorite George Carlin skit there, to push us into war, right? If you have something to protect, if you're generally happy, if you're generally feeling secure, if you have some liberty, you generally don't want to go and mess it up with war. And that has been policy of the United States to promote that. I think we saw that with the China meeting this week, that we were trying to say, look, let's work together, at least on things we can work together and figure out the problems. So if the United States and China can try to work together, right? And I don't think it's wise to call them an enemy. People want to say they're the enemy. I see that on Twitter X from time to time, which I've really moved away from in the last week. But I don't think that mindset is wise. I think that we need to look at everything in the context of, does everybody in the world really want life, liberty, and happiness? And I think the answer is yes. I think our founding fathers nailed that. And if we just try to help everybody have those things without going to extremes of causing a war trying to do it, we're probably moving in the right direction. And I think that we always have to keep an eye on that. We have to try to wrap our minds around the fact that generation over generation, things just keep getting better. So yes, there are hiccups. Sometimes there's indigestion. Sometimes there's outright diarrhea. However, generation over generation, things have been getting better for centuries. And in an age where AI is going to do a lot of the heavy lifting for us, where energy gets cheap, where space travel becomes exciting and probably very profitable for the planet, there was an estimate this week that said if they mine those 2 asteroids they're talking about mining, basically everybody on the planet is financially independent. Think that through. If the base materials and metals essentially just became free at the same time that we're making energy dirt cheap. Had another discussion with a consulting client out in California. I said, look, we have all the technology. We've actually built the prototypes. We know how to convert salt water into fresh water. It's energy positive because you use solar energy to do the desalination, which spins a turbine. So it's a net energy positive. And by the way, you get fresh water and salts, which you can use for any number of things, including fertilizer. And by the way, if you want, you can throw off green hydrogen. So we're going to have plants in the next 10-ish years because the technology is already there. We just have to have the plans and the financing. And I think the financing actually will be the easiest part. I think navigating the bureaucracies will be the hardest part. But we're going to have plants along the ocean eventually that produce fresh water, excess energy, materials, and green hydrogen. Holy cow. The world's just going to keep getting better, folks. And this is where we should look for our investments. What are the things that make the world better? So if I could invest in this cake, I would, because I think it makes the world better. Now, if this cake had no calories, that would be even better. But would it taste as good? Not really sure. All right. I read Forest for the Trees pretty much every week. And I just want to rip on somebody real quick. The U.S. fiscal binge must be reined in as the country is spending on the government level like a drunken sailor, says corrupt, front-running son of a bitch Ken Griffin, the greedy Zucker. That's part of the cognitive dissonance. That's part of divide and conquer. That statement is categorically false. All the data shows that it's categorically false. From every institution out there, it's categorically false. So don't believe it. If you're buying into the we're overspending hype, you're wrong. You've been wrong, and you're going to continue to be wrong, and you're going to lose if you vote in that direction. Why? Congressional Budget Committee. The Trump tax cuts would add $3.5 trillion to the deficit. Tax cuts are primarily responsible for increasing the debt ratio. Now, this is AmericanProgress.org, clearly a liberal think tank, and they talk about how there's a headline right here. And this is something that I've told you, and you don't believe me, I don't think, when I tell you that we should be running a balanced budget and that it's actually not that difficult. Without the Bush and Trump tax cuts, debt as a percentage of the economy would be declining permanently. Permanently. Now, permanently means forever, and forever is a mighty long time, Prince told us. So I'm not so sure that that's the perfect statement there, but it's pretty excellent. The way that demographics line up, the way that the monetary and fiscal systems line up in the United States, this isn't everywhere. The United States is exceptional. You have to get that through your head too, if it's not already in there. Firm and permanent and real and in your heart, that you believe it in your soul. All we have to do at this point is let the Trump tax cuts expire, fix a couple of things from the Bush tax cuts like carried interest, and the way that they gutted some of the estate tax, probably get rid of step up in basis over a certain dollar amount, maybe 5 million or 10 million or something, right? You don't have to touch 98% or 99% of the people out there for tax increases. And really, if you go back to the Clinton tax code, you really don't have to increase taxes on anybody. We just have to go back to the Clinton tax code. And that would cause the deficit to shrink to basically zero. And maybe we'd be running surpluses sometime during the boomer retirement. I've told you that in the 2030s, we should be running surpluses, small surpluses, balanced budget for sure. And if you run a balanced budget for 30 years, you end up with no debt, right? Because part of the budget is paying off your debt. Even the Brookings Institute, which is very centrist, says the same thing. And they talk about how the Trump tax cuts added, and this is what they said back then. As of today, we know that they added about 2.3 trillion to the national debt. So it really comes down to this statement. The tax cuts, which mainly went to the super wealthy, they've captured 80 to 90% of the tax cuts. The last 10 to 20% went to everybody else. We'd have a balanced budget. Now, why do I bring this up? Because this sort of front-running, dishonest, piece of shit, greedy propaganda from people like Ken Griffin pollutes the environment. Here we have the mayor of Miami saying that the coast is going to flood and there's nothing they can do about it, even if they spend $1 trillion. And this arrogant jerk wants to build a tower basically with its footprint in the water. And who's going to be the first person to come crying for government aid when his building starts to tip over because of a hurricane? You can't buy into what people like this say. This guy's a bad man. Sure, he gives some money to charity to try to buy his way into heaven. And what I believe is he probably doesn't believe in that. And he's just trying to snow people because, hey, if I give a couple dollars over there, I can take more over on the other side. Remember the movie Swordfish? Right? John Travolta, Halle Berry? Misdirection. People like Ken Griffin are masters at misdirection. I provide capital for the markets and liquidity. Don't look at the fact that I front run and steal from everybody, right? That's how he became a billionaire. Let's be real clear about that. How do I know that? It's not a bias. I watched it happen. I was like, over a couple of decades, I watched this guy and several others like him, Stevie Cohen, who wants to build up the area around Met Stadium, which is a good idea, but he wants the government to pay for it so he can make a bunch of money on it. Right? Doesn't want to put much skin in the game. Now I'll put a token amount in, and then I'm going to skim a whole bunch out. It's kind of like owning a Major League Baseball team that had 4 Cy Young quality pitchers. And rather than buying a couple hitters so you can actually get to the World Series, you bought a soccer team with the profits from the baseball team. I'm just saying, there's a lot of greedy guys out there and they try to justify it. I'm a steward of the community. I provide liquidity. I'm helping build this. I'm helping build that. I hope your bullshit detectors work when you hear some of this stuff in the next year. So, majority of sectors in the U.S. economy are now showing negative 3-month GDP growth. That means we are getting the economic slowdown, and it certainly looks like a slow grind down to 2% inflation has accelerated, which supports the idea that there will be interest rate cuts next year. I don't subscribe to the idea that it'll be a long period of cuts. I think it'll be fast and hard when they decide to do it. I think it will coincide with the commercial real estate loans causing financial problems and balance sheet issues for the regional banks. And you'll see the Fed funds rate drop from 5.5 to about 3. Quick, like over 2 or 3 months. And then they'll probably stop because by next summer, consumers are spending again. Do you know why? Because that's what consumers do. You're not going to change the way that people behave. Not quickly anyway. We are slowly seeing people live more healthy, but we are seeing real fast growth rates on Ozempic, right? People would rather have a shot to lose weight than actually, eat a salad with a vinaigrette versus, some creamy dressing, chumpkin. Now, I think that the story that Grumman has been telling over at Forest for the Trees is full of great information. I think the analysis is tilted in the wrong direction because of biases that he holds based largely on ideology and adherence to a wrong economic school. At this point, if you're an American and you're not a Keynesian, you're not paying attention. American exceptionalism allows America to be a Keynesian economy. It allows us to help bring the whole world along with us. When I started in my career in the 1990s, the United States was fully 1/2 of the global economy. We're down to 1/4 of the global economy. And people feel like, well, that's horrible. But our economy is bigger than it used to be. So how can it have gone from half of the global economy to 1/4 of the global economy? About to come full circle here to what I started the call with. We have helped the global economy grow so much and spread so much wealth by trying to push liberty and economic growth so that people could enjoy their life a little bit more and find some happiness, which has resulted in the fewer wars that are only sparking right now because there's desperate people trying to do desperate things, Putin and Hamas. It's not bad that the United States economy is only 1/4 of the world economy anymore. It's good. It brought the world along with us, and that is good. More people living better lives is good. A lot of work still to be done, which is why emerging markets are a great investment for the long term. You have to buy the corrections because they're big and they happen a lot. So it takes a little bit of position trading. And I think that emerging markets are where we should be looking a little bit more now. I made the asset allocation change to add more Asia in the Blue Mound 401k plan, which you saw in the monthly global trends update. And going forward, if you take a look at the screening, you can see that nothing is overbought. And quite a few things are oversold or close to oversold. But interesting, nothing below 30 and nothing above 70. So there aren't a lot of extremes on the weekly charts. If we switch to the monthly chart, still nothing overbought and almost, other than marijuana, nothing oversold. And that's only because there was a glut of marijuana for a minute and regulations haven't been what was promised years and years ago. They should eventually get there, but they're not there yet. TLT, which we have added to in the last, I'd say, 2 months, was down in the 20s and now is slowly rebounding. TLT, something that we'll cover with Shooter in a minute, was in the 80s. It was down to 82 less than a month ago. Look at that rally. So there are things in here that we can probably buy as they start to show positive momentum. That is a key. You want positive momentum, which the oscillators are your shortcut to seeing, to start being positive. So if you can get something that's near oversold, but showing positive momentum, and you can verify that there's a lot of undervaluation, probably the sorts of things that you want to buy. So the marijuanas might be worth buying if that's something that you're into. The utilities, I'd rather pick individual utilities because half of the utilities stink. Consumer staples, I would never buy because it's just a crummy sector. This won't last long. Emerging markets, small cap, right? Start looking at that. That's interesting. Emerging markets, ex-China. Interesting, silver is a buy again, so we'll have to take a look at that. So not a lot of things to buy, but some things to buy. If you take a look at the S&P 500 GARP ETF, this is basically the S&P 500 with a formula that tries to get rid of the companies that have no growth. Doesn't have a real good debt screen. But when you compare it to SPY, you see just by pulling out about 200 companies, it outperforms. Take it back 5 years, outperformance gets a little bit more. So if you're an S&P 500 indexer, just the simple switch of switching from SPY to SPY GARP would have yielded you over the last 5 years an extra 24%. I think that's worthwhile. That's why I don't use SPY. There's a better version of it. If you drop in QQQ and you believe that that index in general is just better, look at that. And what if you drop in ARKW with all its shortcomings and you say, look at that. Over 5 years, it trailed. But if you pick any particular time frame, you can tell that it may have super outperformed. And over the last year, maybe it's about to go on another outperformance period. And in fact, it is slightly better than QQQ over the last year. If you take a look at 6 months, which is a time frame that I think should be easy for you to think about if you're a position trader, it's really outperformed. So you have to have some skill in trading ARKW because they don't do it very well themselves. But the basket that they own, if you understand what's in it, Bitcoin being one of the things that influences it, along with e-commerce, it has its periods where it has its huge rallies. I suspect that with the halvening of Bitcoin coming up next year, that the outperformance of ARKW will run in line with the next FOMO rally of Bitcoin. So how would we compare that? I think the easiest thing to do is just pull up the ARKW chart, get rid of all this other stuff, and add Bitcoin. If you take a look at this over the last 5 years, it's not a good chart, actually. How would I show that correlation? Bitcoin's been all over the place. I guess we have to look at shorter time frames. Bitcoin goes up more than ARKW, but the general shape of the curves are the same. So as long as Bitcoin's going up, you're probably going to see appreciation by ARKW. Not as much, and I've encouraged you to own GBTC. But as long as Bitcoin goes up, ARKW probably goes up. So that's what you want to keep an eye on. Is Bitcoin continuing to go up? Is there still a FOMO rally there? And this isn't FOMO by a long shot. FOMO is going to be when it goes over 100,000 in the next couple of years. And that'll be when you dump ARKW, because most of those companies will probably get super overvalued at that point. I expect Square to go from super undervalued like it was a couple of months ago. Square is another one that goes up with Bitcoin. I think that Square was super overvalued over here, right? The end of the 2021 rally. Then it got down to super undervalued, and it's just getting back into where I called it a buy zone. So among some of the stocks that I really like, I think that this is just the first move to get a little pullback and then shoot up. So we want to keep an eye on shooters charts for Square. Finish up with the Metis before we bring on Shooter. Article this week is an updated article. It's actually from a month ago, talking about jet fuel, sustainable jet fuel, and how the airlines are trying to figure out how to get more of it. It's why Metis got billions of dollars of contracts with the airlines. It's why they're not going to have a problem building that refinery. Remember, back in May, Barron's told us to watch out for catalysts in jet fuel and biofuels. What stock went through the roof right after this article? Metis. And it wasn't just us to push the price up. So in case you don't understand the circular bioeconomy that Metis has been talking about, I would just like to point out that the Wisconsin Energy Institute, which is affiliated with the University of Wisconsin, look what their last workshop was. And what are they doing? Not some niche industry. Using agricultural and forest waste, and even really anything compostable, and turning it into renewable diesel, renewable gas, and sustainable jet fuel is an incredibly fast-growing industry. And I am actively looking for 2 or 3 other companies to invest in, because not only is the technology there, but the capital is lined up. The permitting is well on its way. And by the way, big tax breaks, big tax credits. Everything in our 4-step process is lining up for biofuels. Just another reason why energy is going to get cheap is because ultimately we can help the climate by recycling our carbon. And that's the way to think about it. How do we recycle our carbon to cut our footprint in half pretty quick? Now, I don't know how we do the other half, but we can cut our carbon footprint roughly in half in the next 10 to 20 years. I don't know how we get all the way to carbon neutral, but we can pretty much cut our carbon footprint in half by 2040-ish. We'll see what we do for the other half. Maybe carbon capture is the other half. I'm still a little dubious about it. I don't think it can be used for blue hydrogen because you're still polluting. It's just part of the halving, but it's not part of getting to carbon neutral. So we'll see how that develops. But I am keeping an eye on other biofuels companies because I think that they are underinvested, undervalued, oversold, and there's not a lot of people who understand it yet. So we're just starting to see money managers nose around, right? And really the only companies in there so far are private equity. Now money managers are starting to get in there, and then it'll be other institutions. Finally, retail will notice because it'll hit the headlines again and again and again. They'll see the outperformance, and then they'll FOMO their way in. Right now, if you're investing in biofuels companies like I am, you are in there with the private equity firms and the early money managers. That is a great place to be. All right, let's call it a day. Look out for the Macro Dashes article that will finally be coming out. And let's get to Shooter. One moment, please.